Hello, welcome to Wednesday webinar. I'm Julia Hartman from the Bantax National Accountants Group, and tonight we're going to talk about scrapping. Are you considering buying a rental property and maybe renovating it or completely demolishing it and hoping to get a deduction for the unclaimed building depreciation or plant and equipment that you scrap during the process? You may have heard that you can get a Quantity Surveyors Report and do this. Well, it's not as simple as that. The detail is in the fine print. When you dispose of plant and equipment or part of a building, you're entitled to write off any remaining unclaimed depreciation, but the unclaimed amount must be apportioned between the period of time the house was used to produce income and the period of time it was not. With plant and equipment, it is only necessary to look at the current year, but in the case of the building, you must take into account the use by previous owners. Further, the house must have been used to produce income immediately before the demolition or disposal. I have quoted two rulings here by the Tax Office, ID 2010/35 and ID 2010/36. The whinging dog in the background here. Now, this is to give you the information you need. If someone tells you different, it's only referring to building depreciation, those two rulings. So let's look at an example. You're looking to buy a rental property and think you'll renovate it before you put tenants in there. Well, that's got it round the wrong way. If it hasn't been used as a rental, you've got no chance of claiming anything. So you think maybe I'll put a tenant in there for 6 months or a year. Now, before you go any further, let's look at when the building was constructed. If it was constructed before the 16th of September 1987, then there is no building depreciation left to claim. But there may be a renovation that you're pulling down that you could claim that was built after that date. Find out these dates before you go spending money on a Quantity Surveyor Report. And before you go spending money on a Quantity Surveyor Report, because it's going to cost you around $700, let's just look and see what apportionment you are going to get on the unclaimed depreciation as best you can work out, because it may not be worth spending the $700. So, you've got a 20-year-old house, you've just bought it, you put tenants in there for, say, a year, and then you want to demolish it. It's 20 years now, so 1/20th of it is used for rental purposes. You've got to start, and as long as it was used as a rental just before you demolished it, you can't go living there while you're renovating it or anything like that. You've got a chance. Now you've got to look at the previous 19 years, how the previous owners used it. So unless you know that, you've got to assume that it wasn't used as a rental. So is 1/20th of the possible claimable depreciation, which is the amount that hasn't been claimed so far, worth the $700 Quantity Surveyor Report. Thank you for staying until the end, and I hope to see you next week.